Are you buying your next buy-to-let property in a limited company? If so, don't complete until you've watched this episode of the Property Tax Show and read our free tax-saving guide.
We'll explain the most costly mistakes landlords make with DIY limited companies and why it's critical for landlords to get their company structure right from day one.
Hello, I'm James Poyser.
I'm Nadeem Raziq, Head of Tax here at Provestor, the Property Accountants.
And in today's episode of the Property Tax Show, we're talking about Nadeem's brand new guide where you're covering some of the mistakes that you're seeing landlords are making with limited companies. Is that right?
Absolutely, James. So over the last couple of years, we're seeing a huge amount of mistakes that are being made by landlords. And we thought it was imperative that we made some sort of guidance or some sort of manual to assist investors in terms of the common mistakes people are making and what to do to not make those mistakes going forward.
Yeah, because I think, is it 8 out of 10 landlords are currently using limited companies for property purchase? So it's incredibly popular, and I know that you and your team spent a lot of time fixing some of these issues. So we're going to talk about your brand new guide. There's a link in the description below, so go off and grab it now. And we're going to cover some of the topics over the next few minutes. And there's a much deeper dive in the guide. So let's kick off now. First question, quite a juicy one. What's the most costly mistakes that you've seen limited company landlords make?
Yeah, and it is quite a costly one, James, and it's a really common one and quite a simple mistake to make. And this is generally where we see landlords who are time pressured, whether it's through the auction house or their solicitors, to get the transaction done fairly quickly, and they go online and just go to company's house, pay a really small fee, open a company, and keep it as simple as possibly they can, which is just effectively just having one shareholder, one director, which is fine in some instances, but actually when the investor takes a step back and realises what they've done maybe a week after the purchase, it's quite a costly mistake because any limited company buying a property becomes valuable instantly, effectively, and actually fixing that and reversing that transaction in terms of adding multiple shareholders or even another shareholder can be costly from a tax perspective. And I don't think investors appreciate what those costs are.
Okay, so you're implying, so you set up a limited company, I'm not going to make it complicated. I'll just buy it, through my own name, set up this limited company. I'll be a sole shareholder. You buy property, 350k, 500k, probably the average price for a buy-to-let these days. And then a few weeks or months down the line, you go, actually, I should have included my partner.
Exactly.
And you think, I'll just set up give them some shares and away we go. But it's not that straightforward.
And it can be straightforward in some instances, but most of the time it's not as straightforward as well. So it's costly not only from an administrative point of view, but also from a tax and stamp duty point of view, because we are now transferring shares across from one entity to another.
Okay. So those shares have got value because the property's now inside that limited companies. Those shares are now valuable.
Absolutely.
And you can't just give them away without a tax implication.
Yeah.
Got it. Okay. So that's a common costly mistake that you're seeing landlords make.
It is, yeah, absolutely.
Yeah, okay. And I know that you cover that in the guide. I know in the guide you've also done, so this is this great guide, and you've also done a 16-point checklist for landlords as well. So here's 16 things for you to think about before you open start up a limited company. Can you give us a sneak peek into one of the juicy tips that's on that guide?
Yeah, we can. And this is again when people maybe go ahead and create or incorporate this company in a rush, and not really understanding the complications when you're creating a property company, because it's not just looking at the incorporation element of it in terms of who the shareholders, directors are, but you are dealing with third-party companies, i.e. lenders, banks, bridging loan facilitators. So you need to make sure they are happy with this incorporation and your company is fit for purpose. And getting actually mortgage advice at this point is just as important as getting tax advice at this stage. So, we can make an all singing, all dancing company, which is very tax efficient. But if you're not able to get a mortgage for that company, then actually it's not really fit for purpose.
Interesting.
So one of the points I put in there specifically, is to make sure that the company is specifically fit for purpose from a lending point of view as well.
So not all limited companies are the same then? So it's not, you find a limited company mortgage and your lender will just lend because you've got limited companies. It's not as straightforward as that then?
No, unfortunately it's not one size fits all, unfortunately, and it does depend on the shareholder themselves, the amount of equity that's gone in the business, of course the type of property you're buying as well, and of course what your lender you're going with, because we know over COVID times, most lenders became very tight in terms of their lending capability. Things have relaxed somewhat, but we are still aware of many lenders, mainstream lenders, who are still very, very tight when it comes to the lending capabilities of limited companies. So can you give us an example then? What's the kind of thing that you see where
limited company investors get knocked back for a mortgage because they've set up the company in a particular way. Is there a particular trend that you see, or something you see frequently which lenders don't particularly like?
Yeah, so, and again, I can't speak for lenders here, and every lender has their own sort of criteria and eligibility. So, there are big mainstream lenders at the moment still won't provide a product to anyone who has more than 2 shareholders, which is very kind of old school at the moment, because a lot of investors now have multiple shareholders. So you could, if you want to stay with that specific lender, for example, then do not have more than 2 shareholders. There are some lenders who like the control to be with adults only. So if you're thinking about having minors or your children involved in a company, you've got to think about how much percentage of that company you are giving to minors. And actually, when we talk about control and percentage, different lenders have a different percentage threshold when we talk about adults. So, one mainstream lender actually has a 75% threshold, whereas most of the lenders talking about 80%. So as long as the adults have more than 80% control, that's sufficient. But we are getting knocked back on some lenders saying, well, actually, you need more or less. So getting that mortgage advice at the outset is really important, on top of the tax advice.
Great, because and I guess for investors who don't appreciate this, is that some investors will include their children in the limited company for inheritance tax planning.
Estate planning, family planning.
Yeah, absolutely. Great, and I guess there's also an interesting dynamic with that, right? Which is, it's one thing to get a mortgage to buy the property, but you've also got to think about the future, refinancing the property in the future as well. And if you've got, an exotic structure that works for one lender right now, but you need to remortgage in 3 to 5 years' time, you may find yourself in a quite a limited market in terms of your choices that you've got for financing. So it sounds like it is a really good idea to chat to a mortgage broker who specialises in limited companies, I guess.
Absolutely, yeah. And someone who's got experience in dealing with companies specifically, or complex structures. And most of the ones we deal with are do have that knowledge. It's just make sure you reach out to them at the outset.
Yeah. Fantastic. And that's one of the tips off your 16-point checklist.
Absolutely, yeah.
And then so that's a really interesting one. Then just to kind of bring it back to the here and now. So looking at the guide in general and what you've done, is there one actionable tip that our viewers and potential limited company investors can take away right now and get on with?
Yeah, I mean, I feel every item on that guide actually is really important, because they're all very sort of realistic in terms of the kind of issues landlords have on any type of company. But one I probably would say specifically relates to pretty much all landlords, which is making sure the company is sort of fit for purpose from a long-term strategy point of view as well. So, my advice always been, you set the company up once, do it properly. But when I say do it properly, you've got to make sure, again, from a lending point of view, it's fit for purpose. But actually from a long-term point of view, you've got the company set up in a way which is strategic to your long-term plan. So you talked about children, we talked about estate planning. These are very much long-term decisions investors make. And it's amazing how many investors have that as their number one priority in terms of why they're investing and setting up a limited company, but how many of them actually set the company up which is tailored to the long-term goal.
Yes, okay.
So the reason I put that in the guide was because actually I think pretty much every investor I speak to isn't aware of that and should be, and then needs to be aware of how to make sure the company's fit for purpose from a long-term strategic point of view.
Yeah, because I guess it's quite tempting, right? Because anybody can set up a limited company, right? You can go to a company's house, and I think it's £12. Set up a limited company, and away you go. And model articles, they're all churned out, and 24 hours later, you've got your certificate and you've got your limited company. You buy a property through it, and away we go. Away we go. Life's good. Most people are looking out to think about Section 24 and incorporating because of the tax relief. But it sounds like what you're saying is, it is easy to get going, but it really is worth stepping back and just thinking about the long-term game, and then make sure your company's set up in the right way to support that.
Yeah. The risk of the DIYer is unfortunately exactly that, because you mentioned Section 24, over the last 5-6 years, a lot more people, 8 out of 10, are using limited companies. A lot of people doing their own Google research, think that it can be done, and I think it's quite easy for it to be done. Unfortunately, it's not that straightforward, because if you are thinking about any sort of layer of complexity, it has a knock-on effect to things like the model articles, a shareholder agreement, and the types of things you need to have in place, ideally. And therefore getting that advice and taking that step back is really important.
Yeah. And I know that our team here at PROVESTER, we undertook some research where we looked at a whole cohort of limited companies that had been set up through Companies House, looked at all the records, looked at the share structures, and found a huge amount of them that have got quite common mistakes. And they range from things like married couples who aren't taking advantage of tax allowances and the share structures, which we've covered already.
Yeah.
Right through to things like people who are using more advanced share structures, but they don't have the right legal documents in place to support that.
Yeah.
Which sounds like a nightmare, really. This scenario where you could be potentially paying yourself these dividends, thinking that everything's okay, but actually they're unlawful.
Yeah.
So yeah, I guess one of those things that just be really mindful about just spending that 12 quid and incorporating a company. Just step back, think about what you're trying to do. Read Nad's guide. If there's one thing to do, read Nadeem's guide, because in there's so many of these mistakes that are covered with the solutions to those as well, so you can avoid them.
Yeah, and some of the solutions are very simple, like you mentioned there, James, about simple things as tax allowances, because people are aware of the tax allowances, but then when it comes to wanting to use those tax allowances, it's too late because the company's not being set up correctly, i.e. having other shareholders involved. So we can utilise other people's tax allowances. It could be as simple as that, but you'd be surprised how common it is, unfortunately.
Yes. Yeah. Okay, and then so as we start to close up, is there any other kind of single piece of advice that you'd like to give to limited company landlords before they crack on and set up their companies?
Yeah, and without going through what we've already discussed about, James, about taking a step back, trying to speak to the right people, either your tax professionals or your mortgage advisors or even your solicitors, it is taking a little bit of a time out and actually getting an understanding of what your long-term goals are and not just rushing into these things. And we appreciate when it comes to transactional things, people are very keen to get things done very quickly, and they can be, but when it comes to property companies, they are very valuable very quickly. Yeah. And fixing those, unfortunately, becomes very, very expensive. And the guide is therefore designed for you to have a checklist almost to make sure you are looking at these things from the outset, because unfortunately, we don't have a magic wand to fix those very quickly or very cheaply, but it's effectively taking a bit of a time, a bit of a back step, getting the right advice, and make sure your long-term strategy matches what you're trying to do also in the short term as well.
Yes, yeah, good. So it sounds like the worst thing a landlord could do is go off and form a limited company's house with no advice, with no background reading. The next best thing that you can do, grab this guide, link in the description below, go through it, listen to Nadeem, the mistakes that he's seen and the solutions for that. And then moving on beyond that, I guess it's engage a professional, right? It's that, here at Provestor, you can call through to our team, book a consultation with a qualified tax accountant who can give you very specific, personalised advice, ask you questions about where you're going in the long term and help you to make some decisions about the right structure.
Exactly.
And I guess also then we can start talking about, well, pick up the phone, talk to mortgage brokers as well, have those conversations. So the more people that you can speak to, more professionals you can speak to, the greater the chance that you've got of getting a limited company structure that's right for you, and avoid some of these mistakes that could be quite potentially. At worst case, you might miss out on opportunities to save tax.
Yeah.
But it might be that actually then have to spend some money to undo some of those mistakes to get things things right.
And again, from my experience, it'd be lovely if it was one size fits all, but unfortunately, it's not, and everyone's scenario is different, you know, in terms of your short-term and your long-term plans. So just take a breather, get a bit of advice, make sure it's set up properly, use our guides, use whatever guides you can use to make sure your business is fit for purpose from day one and also long-term as well. Brilliant.
So I think we've covered a lot of things that are in the guide. We've mentioned about the tax allowances, getting the share structures right. We've touched on legal documents, which is one of those things I don't think enough people appreciate the importance of legal documents. They just think that the model ones are okay, but there are some flaws in the legal documents, so that's covered in the guide as well. Relatively simple to fix that as well. We're not talking about tens of thousands of pounds with a solicitor to sort that out. It's relatively simple fix. We cover that. And then the other thing that you cover in the guide is quite breaking news, is that there's a number of kind of risky, at best, tax avoidance, but potentially tax evasion schemes that have surfaced over the last few months. Some quite high-profile things that have been reported in the mainstream press. And I know in the guide that you've written about those.
I have, yeah.
And particularly how to spot them, how to understand them, see the risks of them, and how to, I think, the thing you were saying is how to make sure you're not getting seduced by a salesperson to buy something that hasn't been created by a qualified tax advisor. It's somebody selling a tax evasion product. And if it all goes wrong, HMRC don't knock on the door of the company selling the scheme. They come back to the landlord. So that's a really important thing as well. I know you've written about that in the guide as well.
Yeah. It was important just to share my view on that purely because it's a really common question being asked, and it's something I just want to share my professional opinion on, in all honesty. And something people need to be aware of because, again, not going back to old ground again, but property companies become very valuable very quickly. and we don't want HMRC asking questions because then the repercussions can be very expensive.
Yes. And I know actually first-hand experience, we've been chatting the last few weeks because our phone has been very busy over the last 3 to 4 weeks with people calling up who've been using these schemes that have gone to the press, calling through to you to say, what on earth do I do now? How do I unwind this stuff? So yeah, check out the guide. In there, Nad talks about these schemes in more details and how to spot them and the risks of using them.
Yeah, absolutely.
Brilliant, thank you, Nad. That's it from Nadeem and I. So thank you for joining us. I hope you found this episode useful. Let's give you some things to think about. Remember, Nadeem's guide and checklist is freely available. There's a link in the description below. So if you do one thing today, go off, grab a cup of tea, hit that link, download the guide, and have a good read. If you've got any questions, put them in the comments below, and as always, Nadeem and his team will reach out and try and help where he can. And if you like the episode, please subscribe and hit the like button, and hopefully we'll see you next time on Property Tax Show.